Hi there, just going to run over the volume on BHP, and this is a weekly chart, and just to give you a bit of an idea of sort of what to look for in terms of volume, we can see here that these bars here are moving up through here. Yep, the price is moving higher, but the volume here is moving lower through here. So we know that this trend is going to run out of steam. This is a weekly chart through here. And we can see that the market coming down through, the price coming down through here has got increasing volume. So say from this one here's got more volume than this one's got more than this one's a bit the same-ish, and this one's got quite an extensive bit through here. So we've got, this is basically what we call a trend, because it doesn't matter if it's up or down, but it's in a direction and the volume's expanding to the downside. Okay, so that's a trend. So this bar that pushes up here for that week is on lower volume than this bar here. Sure, it's quite a lot, but it's still lower than this volume bar here, and it's moved up. So that's actually a divergence between the price and the volume, a little bit like this situation here. So it doesn't have that incoming volume in, and even if it did, it would need some follow through on it as well. So this bar here's got more volume than these guys here, but you can see that the range in the bar here and where it's closed at the end on the sort of Friday here, or Thursday Friday. So we've got that volume coming in and supporting it here. So it's, if it had closed down here further, then that would have all been selling volume. But we know that buying volumes come in here because it's closed back up through here. This bar here that pushes up through here doesn't have any follow-through volume on it, meaning that this volume bar here is not more than this one. It's not pushing up, yeah? So it's not going very far at this particular point. This particular bar here, this is a bit of a bullish pattern really, because it's actually closing down, but it's on less volume. So basically it means that there's no sellers in the market, even though it opened lower through here. Now this one here has pushed up through here on higher volume than this one here. So there is some strength here, but we know that there's strength from here because we'd seen this volume in here. We know exactly where the support is. You can also check on volume coming in from how much volume is bought at each price to find out exactly where the price is. So this one pushes up, but once again, this one here is actually lower than this one here, and there's no follow through volume on that one. And then if you ever see this bar here with higher volume than the previous one in an uptrend, then that's actually the time to look to go short there. And also it's coming in on the level here, so which is 40, which is a medium level, so you'd expect that to be naturally sold off there, and that's what you would be doing there. And then we can see that this market moving down through here has actually got diminishing volume as well. So it's not really a trend coming down, is it? It's coming down, but on lower volume, because that's how a market can actually have a low or high. It can be on diminishing volume, so it's going up and it's diminishing, yeah, or it can go up there and have a spike like this one here. So either increased volume or diminishing volume into a certain price. Yeah, so in this one here, this push up here has got less volume than this one, sign of weakness. This one here pushing up here has got less volume than this one here, and then this week here starts. So this is a trend, and this is a correction through here. And basically what it's saying to us is that there's demand in here. It's a game of supply and demand. There's demand in here, and there's selling in here as well. And the selling would come in at the medium level here. Yep, this one, sorry. First of all, so we know this is back on a daily chart now. So we know that that's the medium level, and while the market's under here, it's not supported. It's only supported by minor levels, and the first minor level to the downside would be 38. And you can see here that 38 really becomes a part of the balance point in the correction. The next minor level down is actually down at 35, so 1, 2, 3, 5, and 8. Fibonacci numbers running in that ratio. But between 35 and 38, would be sub-level 3650, and we've talked about this a lot being in through here, so we know that that's where the demand is in there. So it's really what we're looking for here now is we're looking for 38 is the balance point, but we're looking for it to either become support or resistance. And because we're looking at this market here, we would also be looking at BHP in the US trading at a medium level of 65. 65 is a medium level. So using that and this one will be working on the 38 here. So look, basically we want to see this develop as resistance. That's what we'd like to see here. And if that's the case, then we can look to add to those positions. But using the levels here would need a series of, it needs to sort of try to get up there and fail. So that's what we're looking for there. And if you see that failure occurring in here under the 38, well, then we can add to that position because we'd be moving with the sort of momentum. The momentum is really just the volume. So we'd see it in the price pattern unfolding. And then the next one here is 36. Now, if this is a big correction here, which is highly likely because of the overlapping wave structures, is then that this will push to the downside, and we can pretty much, the bigger the correction, the bigger the next trend. Yeah. So if we're wrong about all of this, then we would see this market find support up on the 40. But as it currently stands now, we're looking at the US markets and metals and crude and so forth. So moving to the downside, but we still need a bit more confirmation. And I guess what we're looking at here is the 38 becoming quite confirmational in here as well. Just while I'm here in the materials sector, this will be part of the energy sector as well, of course, but the XMJ, just to bring that into picture here, if I put the medium level through here, you can see that the medium level through here is quite strong and it's got some purpose, and that's 11,500. So once again, that 38 and that 11,500 would play their parts in that one as well. And you could have a look at the energy sector as well because we're dealing with BHP, but we're looking at this being corrective, and if the correction is finished, then we'll see further to the downside. So we feel that's the case in lining that up with the US markets. But within using Elliott wave, the impulse waves are the easiest to understand, and they're quite accurate to work with. But when it comes to corrections, there's basically 12 different types of corrections, and that's the weakest part in Elliott, and corrections can expand out on themselves. So it's a little bit of a guessing game, but we'll see how we go there. So this is where the trading levels come in as support and resistance, and drawing the line in the sand to get those positions in there at the right time, so to speak. All right, cheers.